JC Parets. It's Joel and Dennis. How you doing this morning?
I'm doing well, guys. What's up?
Well, we're just taking a look at the markets here, and first let's just get your thoughts. The unemployment data is coming out tomorrow. The markets are going to be closed. Do you think that some managers might be taking a little bit of a cautious stance or doing some hedging? What's your take on that?
Yeah, I would. As you guys know, we discussed last week. We took a lot of money off the table 2 Fridays ago on March 20th, and we really haven't started putting it back on. And quite frankly, I'm not really trying to get too cute before the weekend. I'm not really that short term in nature, but because we're kind of approaching the market as we start the second quarter from really a very unbiased perspective. With not a lot of with big cash heavy positions. To really start allocating assets back in, before this weekend, to me, it doesn't make much sense. One thing that we did do was we started buying a ton of Russia this week, ton.
Yeah?
RSX specifically. We're in some of the calls. I like it, man. I really do.
So you must be liking oil then. Do you think oil's bottom? Because obviously Russia's going to move closely with oil there. So is that why you're at Russia?
Yeah, there's this common misconception that you see, in the media that crude oil and the U.S. stock market move together, and obviously nothing could be further from the truth. But the correlations between Russia and U.S. And oil really are pretty high historically as well as short term. So yeah, one thing that I learned, and I really learned the hard way, was not to overthink things and trade what's in front of you. Not necessarily what the market should be doing, but what it actually is. And you're 100% right. Russia and oil do move together, but I'm trading the Russia chart. I'm not long oil. So there's that, right? If I thought that oil was going to go a lot higher, I would just buy oil. I like the Russia chart. You can draw a downtrend line from the September highs. You can draw a downtrend line from the October highs, downtrend line from the February highs, and we've broken above all of them. So regardless of how you draw your trend lines, we've taken them all out. So, that's really what I've been looking for, to get long. We did that this week, and we got really aggressively long. And the best part is, risk manager-wise, it's very clean. We only want to be long above these downtrend lines. If we're back below that, all bets are off. So risk-reward-wise, I think it's very much skewed in the favor of the bulls.
That's what I like about you, JC, is that you always just look at the charts and you have your strategy down there and you go with the flow and you don't let other things sway your opinion. If the chart's telling you to buy, you buy, and the chart's telling you to sell, you sell. And that's always, as long as you have that strategy there. But what's something else there? You usually have a contingency plan on your trades. Do you not, JC? Like if this RSX, all of a sudden didn't start going, where is your out? Do you have your out predefined before you enter the trade?
Yep. You can look at the highs from Tuesday. Look at around 17 and a quarter ish. If we're back below that, that means we're probably back below the broken downtrend lines, and I don't want to be in it. So that's really the level. Fortunately, yesterday we had a great day in Russia, so I'm not complaining. And it looks like based on what's happening pre-market, it looks like Russia, all the Russia ETFs are going to gap up at least 1%, and oil isn't up. Oil's down almost 2%. So, I think just another good example. You're 100% right. Russia and oil have very high positive correlations. But on a day like today, Russia's up and oil's down. So, again, another good example of not overthinking things, trading what you see. I'm not in oil. I'm in Russia. So, but obviously I'm rooting for oil here.
Okay, just a quick question. A big volume day on an update. Does that give you a little more confidence in your call as well? 15 million traded yesterday versus less than 10 million the previous day.
Yeah, and Charlie Dow would be really, really disappointed in me by saying this, but I'm not a volume guy.
Okay.
It's one of the tools that I kind of eliminated from my arsenal. Over the last couple of years, that and the 50-period moving average, I don't look at that either. These are things that I used to incorporate in my analysis that I simply don't. And I think a big reason is that because of the derivatives market, it's very hard to define, big volume and down, up volume and down volume. The volume could be there to hedge, put options,
True.
so you really don't know where that volume is coming from. Charlie Dow didn't have that problem, so if he were sitting here with me right now, we'd be having an interesting conversation about that. But I think this is one of those examples where, one of the few examples where things have essentially changed. Since Charlie Dow wrote his original tenets back in the late 1800s. It's one thing that I don't incorporate. Now, is it a bad thing that we had big volume? Probably not, but I'm not making decisions based on it.
One more thing there, JC, just to comment on what I noticed yesterday where I was sticking with the oil theme. Did you notice most of the oil stocks themselves were actually down yesterday despite the big rally in oil? What do you make of that? Because usually the oil stocks always usually move with oil, but yesterday I noticed Exxon had a bad day, Chevron was trading down, and oil was up significantly there. So what do you make of that?
Well, I wouldn't necessarily agree with that. I mean, you look at the oil services.
Somewhere, yeah, you're right. Okay.
They were up yesterday, and again, I also don't like to take too much from one day's action. But I will say this, to your point, when oil made new lows in March, none of these energy sectors did. Look at the big integrateds like XLE did not make new lows. Actually, put in a higher low last month. Look at OIH, the oil services, also did not make new lows in March when oil did. Look at the E&P names, also made higher lows. I got to take that as a good thing. When crude oil makes new lows and a stock didn't, I'm not in them, full disclosure, but I wouldn't be short them. They also hit their downside targets between December and January, so there's absolutely no reason to be short them. I like the mean reversion here. I mean, again, full disclosure, I'm not in it, but I think we keep mean reverting, and it's really one of the reasons why it's hard for me to be super bearish, U.S. stocks as a whole. These energy components are huge market caps. So if these things are mean reverting and they're rallying, I find it hard to see, the market get slaughtered here. So, I have a pretty neutral stance right here for the major averages with, structurally a bullish bias, but, and again, super unbiased here because I don't really have a lot of exposure in the U.S., very little. So I really don't care either way, but again, it's hard for me to be bearish. I'd love to see a washout. I really would. Very illiquid markets tomorrow, big jobs report that everyone's focused on. So I hope they kill the markets over the weekend and we get, a nice little panic sell-off, maybe wash out, some excess longs. I think that would be a nice catalyst to take us a lot higher. That would be best case scenario for me. Obviously it never plays out as you want, but that's what I'm hoping for anyway. Just let them kill the market over the weekend.
Just XLE, folks. I'm just looking at the chart on this. Boy, you got 4 out of the last 5 highs between 78 even and 78 and a quarter. That's a nice resistance level. That would be a breakout if we could close above there. You mentioned the jobs number, and I know that you kind of more, you react to your numbers and your analysis and stuff. I mean, what are you looking for in this? What like you said that the market may get killed and give you a good buying opportunity. Do you think just no matter how the number comes out, the market sits in a point where bad news is bad news and good news is bad news here with the interest rate hike looming over the market?
Well, again, I don't think I didn't say that I think the market's going to sell out this weekend. I said I hope the market gets crushed this weekend.
I stand.
Yeah, I have no idea. I don't really have strong conviction either way. Selfishly, I'm hoping they slam these markets hard over the weekend. Everybody gets crushed. Everyone's panicking on Sunday night, and I come in on Monday morning and start doing some buying. That would be my best case scenario. Is that going to happen? Probably not, because I just told you what would be my perfect roadmap, and the market never does what you want it to do. So, we all know that. As far as interest rates, they're not doing anything this year. Fed Fund Futures keeps suggesting that. The media tells us that there's higher likelihood of interest rates, and interest rates have gone down every single day since they told us that a couple of weeks ago. So, I don't buy this nonsense that rates are going up. The Fed Fund Futures keep pushing it back. We're at the lowest probabilities of the year so far. Last I checked, there was a 52% probability of an interest rate hike at the late October meeting. That's down from the high 80s in January and continuing to trend lower. So I don't see anything at all market-wise that suggests interest rates are going up. To the contrary, I think interest rates will continue to stay down. And, I just, the obsession with higher rates is fascinating to me. We're in a 35-year bear market in rates. 35 years. I don't understand why everyone is such a rush to pick a bottom. I don't think a bottom is in, and it's a process. We're talking about a market that's been trading for over 200 years, right? One of the oldest markets that we look at. And historically speaking, go back to the early 1800s, late 1800s, look after World War II. The bottoming process in rates has taken 10, 15, 20 years. So why is this time going to be the first time in American history that rates V-bottom? I don't get it. I don't see it happening. And we could stay here for a long, long time. I mean, if they would have asked any of us 15 years ago, and everyone in Japan 15 years ago, where interest rates in Japan were going, we would have all said higher, myself included, you guys too. And guess what? They're still down there. So I'm not saying that we're Japan or whatever it is. It's not my area of expertise. But can rates stay down here for another 5, 10 years? Yes, they can. I'm not saying they will, but that is certainly a possibility. So I see zero reason to be, to be anticipating higher rates. Let the media, go nuts about it and waste everyone's time arguing about it. The Fed fund futures have been dead right since the beginning. They still suggest rates aren't doing anything.
It's a great point, JC. Completely agree with you. I think low rates are here for a long time. If you do think rates are low, we've seen this recent sell-off in the utilities over the course of the last 2 months where interest rates concerns. Obviously, we know utilities, when they think interest rates are going to go rising, those might get whacked. And if I'm looking at the XLU or even looking at some of the individual components like Southern, SO, like DT Energy, a lot of these stocks have really been beat up over the last couple of months. Do you think there's an opportunity here? I'm looking at like SO. It's got a 4.7% dividend. I'm looking at DT Energy with 3.4% interest or dividend. I'm looking at Duke Energy, DUK, 4.1% dividend. Do you think it's an opportunity here to pick up some of these stocks as they've sold off in the last couple months?
Probably. The REITs did really well last year. The utilities, both, high dividend payers. You want to know something interesting, man? Last year, with the strength and the high dividend paying names, the telecoms didn't participate, which I thought was interesting.
Right.
They're also high dividend payers, and don't be surprised to see some rotation, into that area for the very same reasons you mentioned. But they didn't participate last year, and don't look now, but they're poking their heads above, resistance from the past 15, 16 months. Don't be surprised if you see a nice little rally in telecom, not to mention that AT&T just got kicked out of the Dow, and we all know how well stocks do after they get kicked out of the Dow. So that's a big component in the telecom space, another big high dividend payer.
5.7%.
I don't love AT&T's chart, I'm not going to lie, but, again, just another catalyst and a component that could potentially do well, bigger picture. Look for telecoms, to make some moves. Which I haven't said anything good about telecoms in God knows how long. So it's nice to see me looking at them a little bit more positively.
AT&T dividend 5.72% here now, so that is enormous. Verizon, VZ 4.5%. Those are big dividends. Full disclosure, I do have a trading and an investing position in AT&T. Lumber liquidators, just moving on from this, their JC, they just came out with a business update here this morning. The stock is getting a lift here in the pre-market. We were looking 24% short interest on this. The first quarter sales were okay, but obviously everything happened at the end of February here, so you'd expect Q1 to be okay. March sales declined year over year 12.8%. Somewhat concerning here, but they're still coming in here and buying the stock here this morning, trading up $1.30. What do you think of lumber liquidators technically?
Yeah, I told you guys last week I like it. I think we rally. I think we keep rallying at this point. We have a nice bullish momentum divergence. A lot of pessimism out there. Bullish RSI divergence on the weekly chart and the daily chart. That's rare. We're stretched from the mean. I'm not in it, full disclosure. Obviously I wish I was, since I told you guys last week I liked it, but I think we keep mean reverting. I think we can have 10 points to the upside. I wouldn't be surprised one bit. I kind of wish I was in it.
Yeah.
So we'll see how it acts.
Let
But yeah, I like it. Looks good.
Okay, let's talk about old school tech here, and let's start with Micron, a pop and a drop here. Could you give us thoughts on Micron Technology, MU?
Yeah, what I love about this name, and I was talking about this yesterday. I love how we undercut the October lows. You guys see that? How late last week, we undercut the October lows, and then we rally right back. Simultaneously, momentum puts in a bullish divergence. I love that. I think we mean revert. I think we get back towards 31 and a half, 32. I'm not in it. I bought it. We were in this in February. It hit the 200-day, and we backed off, and kind of haven't been involved since. But yeah, I like it. As long as we're above the October lows, I think we can own this for a mean reversion. Below the October lows, you don't want to be in this.
Okay, we'll ask JC about JC Penny here. Analyst helping this thing out. Big move from 8 to 9. Old retail here. What are your thoughts on JC Penny?
Yeah, J.C. Penney was a name I loved last year. Actually, a year ago exactly. We were talking about buying it for a 30% move. We got that. Then we got a pullback. I wanted to buy it again for another 30% move. We got that. So I mean, historically, I've been a fan of J.C. Penney down here. But now with a flat 200-day moving average, I tend to stay away from that stuff. Anything with a flat 200-day, just causes headaches. I don't need that in my life. You get a lot of failed breakdowns, a lot of failed breakouts. A flat 200-day is just the sheer definition of a lack of trend, particularly when price is right near it. If price is substantially below it or substantially above it, a flat 200-day would argue for, mean reversion back towards it. But when price is right at a flat 200-day, that's a headache waiting to happen. I like to live a headache-free life, so that's not for me.
Okay, we've been on the line with JC Parets. He's the founder of Eagle Bay Capital. He's also a Marketfy Maven. You can check out his products on marketfy.com. JC, thanks for joining us. Enjoy the 3-day weekend. We'll talk to you next week.
Thanks, you too, guys. Talk to you soon.
Thanks, JC.